Hey, Joshua Phillips here at Churchill Mortgage. Happy Friday. Glad to be back doing a live video where we're going to go over what's happening with the markets. And let me say that if you're new to following these market updates, I will include a link that goes over more of the basics of how to read these charts and what's been happening over the last couple of years with mortgage-backed securities. So what we're looking at here today is a mortgage-backed security chart. This is what we as professionals all over the country, this is the chart that we have up so we can keep an eye on what's happening in the market. Not that we can control it, but we can see what's happening and see whether we think mortgage rates may be improving a little bit, getting a little bit worse. All you need to know for the very basics is green is good, red is bad, and the higher the security price, that means mortgage rates are improving, and if the security price is getting worse, that means rates are getting worse. So what we're looking at here right now is a 90-day chart. So we peaked out, we've talked about this in the past, we peaked out right at the beginning of the year at this level, which was great. We saw rates come down, from over 8% to really below 7%. But then we drifted lower. Rates got a little bit worse over January and February. But, March has been a little bit of a different story. You're seeing some green. You're seeing a slow climb up. And right now we are sitting somewhere really right between kind of the highs and the lows of this year. So we've seen a nice bounce. I talked about last week in the video or in the email I sent, these things called resistance levels, moving averages, and we've actually bounced above the moving averages, which is good. So, where we end today is positive for mortgage rates as they've been kind of climbing back from the worst levels at the end of February. So, quick headline I'll share with you. So probably the most, oftentimes the most important, let's get rid of this here. The most important report each week or each month is the jobs report. And that's something we pay attention to. It has a lot to do with inflation and what's happening with future Fed hikes or cuts. And you know what? This report was just a toss-up. It really was kind of a nothing. They showed more new jobs than expected. That would probably be negative for interest rates, mortgage rates. But then they also saw that the unemployment rate rose, which would typically be positive. So they kind of cancel each other out, and I would call this just a net neutral report. We continue to watch inflation news. That's the most important thing to pay attention to. So anyway, well, listen, always here to have a conversation with you about your situation, whether it's about being approved, whether it's about mortgage rates for you specifically, and here to help any way we can. Like I said, March has been positive so far for mortgage rates. Now, let's not just assume that things are going to get better and better. It is a roller coaster. We certainly may see things, next week could be worse, next week could be better. But for now, we're happy. We've seen some green over the last week, and hopefully we'll see some better rates coming in the near future. All right, take care. Bye-bye.